This is Pamela Weir at Spotlight for Entrepreneurs. I want to welcome you to today's episode. Our guest is Richard Myer from Redwood Tax Specialist. We'll be coming back to Richard in a moment, but I'd like to introduce you to Kat Stone from Third Age Mojo. And Kat, he has a tip of the week. So Kat, what's the tip?
So my tip of the week is all about courage. And the first one is for successful entrepreneurs, courage and leadership go hand in hand. If you imagine yourself as a leader when you need courage, it will be much easier to bring to yourself. But you must lead by example. I mean, you can't just say things. But if you want to lead by example and have courage, you need to remain legit. Legitimacy is very important. So remember always, and I know we've all heard this, that courage is not the absence of fear. It's being afraid, acknowledging your fear, and pushing ahead towards your goal anyway. So you know then, along the way, you will gain the necessary capabilities. Be willing to learn. Be brave enough to learn. So demonstrating courage really shows leadership, and people will feel you. They will feel your commitment and competence, and they will be drawn to you, and they will follow you.
Richard, welcome to the Spotlight.
Well, thank you for having me. I really appreciate being here to get to talk to successful entrepreneurs, because that's just right up what we do. Because if you're successful, you're probably paying too much in taxes.
Right.
And you don't have, what I'm here to tell you all is that you don't have to, that there are ways to reduce and eliminate taxes on your income. And we can help you with that. We bring the Wall Street techniques to the Main Street successful business owner. And you can use the same techniques that the billionaires use to pay no taxes, create generational wealth for your families. Yeah, I'm going to talk about three things today. The first tax strategy that can be put into place is called the cash balance plan. And it's a retirement savings plan on steroids that you can do in addition to a 401k. A 401k limits your tax deduction to $66,000, $73,000 if you're over 50 for catch up. With the cash balance plan, you can do it in the several $100,000, put it away, let it grow tax free, and actually even pull a portion of it out tax free at the end. So that's just one way to do that.
I'm sorry, is that a retirement plan, or you can only pull out money at the end, or is that a plan that you can tap into from time to time, like if you're a business owner and have an emergency that you need funding for?
No, this one is a retirement plan. I'll get into something. This one is a retirement plan. So it's like the 401k. Your funds in the plan grow tax-free. So basically what we do is we take the money you owe in taxes, put it into this plan so you don't pay any taxes. It grows for you tax-free. And then when you pull it out, you are taxed. But there is a way to pull a large portion of it out completely tax-free when you unwind the plan. But it is a retirement plan. And that's why it is a retirement plan. And you can get multi-six-figure tax deductions out by implementing this plan.
An annuity is something that a person would invest in, making monthly payments over a period of time. So at the end, when they're retired, they get paid a monthly stipend or income. But you have alternatives to annuities. What are those, and what are their advantages?
We have alternatives to annuities. My RIA is also a family office. Typically, a family office, to invest in that, you have to have over $100 million in assets. in our case, we brought it down to 250,000. So
Wow.
we have effectively guaranteed annuity alternatives that pay fixed that pays 9.25% annually, effectively guaranteed, and you get a quarterly dividend out of that, or you can reinvest it. And then there's also a growth annuity alternative that can serve in multiple ways. It's a little more long-term strategy from two to 20 years. And basically what this does is allow somebody to invest. You don't even have to put all cash into this. You can take real estate, you can take Bitcoin, you can take other assets, put it into this.
Wow.
Get a 60%, up to 60% of what you put in is tax deductible right off the top. And it grows tax-free, and you can pull it all out tax-free also.
At one time, or can you do incremental withdrawals?
You can do incremental or all at once. There's ways to do it. It all depends. It all depends on. Now, this is a much more complex structure. This takes a lot more thought and planning, depending on what assets you put into it. But it is a proven technique and product. We have engineered. It is mathematically engineered, so it is effectively guaranteed to really give you over a 20% annual return and basically the way it's structured mathematically is that every catastrophic event since 1998 has been factored into this, and it can withstand any event that has previously occurred as a catastrophe, from the housing crisis to COVID, whatever it was.
But that sounds like a really great plan. Did you have a name for that?
Annuity. We call it the annuity alternative. I just call it the alternative structure. The alternative structure. And this has been.
It sounds like a great alternative.
It is, and it's been mathematically engineered by these wizards on Wall Street, who use. It's all quantitatively verified. And what I will do, if somebody wants to do this, is I will get them on with the mathematical wizards that can explain everything, and show them how this is engineered for safety, for growth, safety, and all the things.
And your third item was about life settlements. I've never thought about a life settlement. What is that, and what are its advantages?
Well, you have seen the commercials where they say, we'll buy your life insurance policy, right? Everybody's seen those commercials?
Yes.
Okay. Yes.
Okay. Mm-hmm. What they don't tell you is they're just trying to pay you as little as they can for it, and they're going to sell it off to these big hedge funds. They also don't tell you the tax implications of doing that. Every life policy, you have a cost basis, and anything above that cost basis is going to be taxed. They don't tell you that. So we do several things. We act as a fiduciary and do an analysis of your policies or your policy. We will then calculate the tax implications of selling that policy. We will then go out in the market. Instead of just going with one of those guys on TV, we will actually get bidders for your policy, and your policy will be bid out, and you'll get the highest possible amount. Typically 5 to 10 times more than you would get by just calling the 800 number on TV. And lastly, when you do sell the policy, we'll structure it so that you pay little or no tax. on the gains in that policy.
Wow.
Because a lot of people don't want to wait till they
Excellent.
die to cash their policies in at this point, because the people are offering money for it.
Exactly. Well, and another reason to cash one in would be if you had some health issues that you needed to pay cash for, or whatever is going on. So,
Well,
there
that's
are
another
many
dirty little
reasons
secret, is
to
that
do
they
that.
only want.
So,
That's another. That's the actually they they want you to be unhealthy so that you die as soon as possible, so they can cash it on your policy.
right?
That's another.
Well,
That's
maybe
another
we can
issue.
change that. I know. Maybe
That's
we
another
can
issue.
change that in the future for society. That we reward people that live longer. But so this is for entrepreneurs. So Richard, do you have any advice for entrepreneurs out there in and how they can do their tax shelters and credits? What they should be looking for?
It takes planning. You can't just turn on a dime and say at the end of the year, say, "Oh, I need a tax deduction." What you need to do is look at your situation, look at where you are and where you want to be, where you are, where you want to be, and then we can help you structure things so that you pay the least amount in taxes. It takes planning.
Excellent.
We don't do like what your CPA does, which is look at everything. Oh, you can take this deduction or that deduction. What we do is look at your life situation, and we develop plans for and structures
I
for
like
how to
that.
handle that, so that you are not paying taxes on your assets and your livelihood.
I had an instructor that used to tell me that planning was half of the show.
That's it. It's all
Well,
about.
thank you, Rich.
It's all about doing the planning.
Excellent. So there you have it, entrepreneurs. Make sure you have a tax plan in hand. Getting started in 2025. You can reach
Not too
Richard
late for
Myer.
2024.
Oh, okay, that's good to know too.
It's not
And
too late for 2024. Cash balance plan is a great idea. If you have assets that you could put into our alternative structures, we can do that and get that for 2024 also. It's not too late.
Excellent. Well, thank you, Richard. Everyone, you can reach Richard Myer in the description below. And we thank you for your time with us, Richard. And so going forward into next week, our guest will be Evan Raouf from Fit Living Academy. Evan is an optimal health and wellness coach, and we'll have him next Thursday. And until then, everybody, stay in the spotlight.